Thank you all for joining us. And most importantly, I want to begin by thanking our speakers today. We have got two panels, and we curated today's panel because we know that touchpoint topics within them are critical to getting our strategies to net zero exactly right. And also, as we meet today, leaders across government and industry are meeting in Brazil for COP30. So to me, the most exciting news I've seen out of COP is a continued push toward harmonizing standards, highlighted by last week's ISO GHG protocol announcement. And of course, in the COP30 action agenda, especially ACE6, Unleashing Enablers and Accelerators, calls for aligned carbon markets and accounting standards. So by 2028, they are committed to strengthening the global system that underpins credible reporting, transparent markets, and interoperable regulation. Now, those of us working in green building and net zero buildings know harmonization is critical to scaling, and that without it will continue to be fragmented in our approach and our efforts. So when carbon accounting is aligned, organizations can act faster, set stronger targets, and deliver bigger emission reductions. So today's conversation focuses on practicality, affordability, and measurable progress. A core challenge for our industry is that while everyone is talking about net zero, most organizations don't know how close or far they are from achieving it. So the building sector has long chased labels, whether it's been LEED, BREEAM, ILFI, EDGE, Green Globes, etc., but without clarity on how these labels relate to true net zero across water, waste, energy, and emissions. Of course, across the three emissions, scope 1, 2, and 3. Now, plaques and PR still dominate motivation, which is a good thing, but they also need to sometimes inconsistent results and interpretations. So what we need is one shared foundation, which is measurement. And I've said this for a long time: what gets measured gets done, what gets done gets improved, and what gets improved gets replicated. Hence, we believe measurement should be the fundamental basis of any real net zero strategy. The value proposition for net zero is fundamentally a math problem. So quantification makes decarbonization predictable and plannable. And without real numbers, labels don't tell you how close to net zero you are. Only measurement does. And we also know that the market is widely varied. So, with that variation, some are well underway to get to net zero with ambitious goals and also equally ambitious action. But then some of them are just getting started, and some of them are just restrained with limited sources. And some have not started at all. So we have a little bit of mixed bag everywhere. But we, as a community of practitioners, we need to be able to meet them where they are. So every organization needs a starting line. Instead of asking, are you net zero? I think the real question we need to ask is, have you started on net zero today with real measured numbers? And I think that's what will get us to the goalpost that we are all asking for. And then each of them have to say, we can say to them that we can help you with that. So if you're interested in pursuing those real measured numbers, we are here to help you. So progress is the value that those of us in the net zero space must champion. So the path from 0 to 100 must be three things at once. It must be traceable, trackable, and verifiable. And this is the shift that we at the GNFZ are trying to lead. So progress over perfection and math over marketing. So I'm often asked what I believe has held rapid decarbonization at scale back during the past decade. And I believe it's because we have not had up until recently an incremental, affordable, and scalable approach that meets businesses and buildings where they are. So the top of the market has the tools and resources they need, but the middle and bottom feel left behind. And this is not a news to this audience, but that's a fact. Obviously, buildings don't need another rigid, expensive, prerequisite heavy system that takes years to get results. What they need is a way to get started immediately, obviously with the data that they have, a plan that's credible and achievable, not theoretical and not backed by real data. Milestone recognitions on the way as you make progress towards net zero, because it's a long journey. You are able to have a progress report for buildings of all sizes and uses, and understanding that taking steps toward net zero is about future-proofing their enterprise, their organizations against both regulatory and climate risk. And of course, the rewards for action are greater efficiencies across the board, smarter operations, cost, greater investor and stakeholder confidence, and being prepared for the inevitable climate changes ahead. So 5 years from now, energy efficiency won't be the new frontier. Going beyond efficiency will be. And I think that's where we are all actually trying to contribute. Before we dive into our panel topics, I wanted to provide a very quick, brief snapshot of how GNFZ helps organizations move from awareness to action. Our main tool is our net zero certification program that is applicable for buildings, businesses, and products. And We have designed it based on our decades of lead experience and other green building rating system experience, particularly to remove the barriers to decarbonization. So our certification platform addresses awareness to action by helping you quantify, plan, implement, track, and then certify the outcome based on the GHG protocol recognized by GRESB, enables you to map real scope 1, 2, 3 and emissions, give an immediate and actionable emission assessment, validate a net zero plan in weeks, not in years and months, but making the decarbonization journey more methodical, measurable, and realistic, mapping investment strategies to financial outcomes, particularly savings, providing milestone recognition, as I noted earlier, towards progress and goals achieved. And we certify the results with understanding that for us, certification is a byproduct, not the goal. The real value is credible visibility for investors, customers, regulators, and internal leadership, all kinds of stakeholders, to have a perspective on where they are towards their net zero goal, which they have already committed. And finally, last but not the least, we convene a broad range of AEC practitioners who are advancing solutions that are specifically focused on unlocking the rapid transition to net zero. So meeting the Paris Climate Agreement and upcoming climate deadlines requires full engagement for all of us. And we at GNFC are committed to building that global network, recognizing that we must move faster and smarter than ever before. We need to fully commit to the notion that the definition of sustainability, as we knew 5 and 10 years ago, has completely evolved and is evolving. And that is going to take this community of leaders to move net zero acceleration from aspiration to action. The bottom line is that net zero is not abstract, it's measurable. Every building can get started immediately with a pathway to zero that reflects its reality. Success may look different in every geography, market, and portfolio. We love that customization and localization, but the destination is the same, that is zero. And what matters is progress towards zero. So if you're not already joining the GNFC network, please do so today. And we are excited to have you on board and continue to advance this conversation in the global marketplace. Now with that, we will actually talk about why we came here for, to hear from our experts and our industry leaders. Today's panelists are all trusted leaders shaping the future of the net zero movement. Our first panel's expertise is how net zero in the built environment becomes real through innovations in architecture, materials, construction, engineering, finance, and building systems. And every decision from concept to operation compounds emissions for decades. So for the first panel, our expert presenters are Bahar Armagani, Instructional Associate Professor at University of Florida. And the second one is our own Chris Castro, GNFC Advisor, Executive Vice President and Chief Sustainability Officer of Climate First Bank. And Samantha Varela Sherman, another great friend, Associate Director of Certifications, Verdani Partners. So thank you, Chris, Samantha, and of course, Bahar, for joining us today again.
Thank you.
And if you're ready, we are ready to get started.
We're ready.
All right. So we will start with Samantha. I think it'll be fun to start with Samantha. Samantha, you bring a lot of experience, enthusiasm in portfolio performance management. So what's your elevator pitch on decarbonization to your new clients? And do you lead with business or climate case? And what are the reactions? What are the challenges? And how do you actually navigate through these conversations?
Yeah, thank you. So when we talk about decarbonization with new clients, we always start with the fact that decarbonization isn't just a climate goal. It's a business strategy for protecting their asset value, in this rapidly changing market. And the buildings that perform best will attract the best clients with the best tenants, the best financing terms, and the most resilient valuations. So while, of course, we care about the carbon, we lead with the business case first, because that's the language our clients speak. Value creation, risk mitigation, long-term asset performance. And so energy upgrades and electrification are basically future-proofing. So clients that can avoid carbon penalties, insurance instability, their buildings becoming obsolete. And once the clients kind of see those actions also protect asset value, lower operating costs, things like that, the climate benefits become the easy part. The data shows the business case, and then the carbon case usually points in the same direction. And so we're also seeing that the language in the industry has shifted away from ESG messaging Many clients don't want to talk about net zero or decarb. Some of them prefer risk reduction, operational efficiency, resilience. So for us, the label matters kind of far less than the actual progress that's happening. Carbon is going to becoming a very real liability. So as long as there's a plan and forward momentum, the important part is shifting from bigger targets and roadmaps to actual implementation. And so some of the biggest challenges, I would say, are usually data quality, fragmented ownership, so like split incentives between tenants and owners, capital constraints or competing priorities. And so when we walk them through mapping out a clear sequence, we use kind of like measure, model, mobilize. Measure what matters, model financial and carbon impacts, and then mobilize capital to act. And so then by doing that, that's when decarbonization stops feeling so abstract and starts being more achievable. And because we know our clients' portfolios, business priorities, and operational realities so deeply, we can really focus on the actions that actually implement, not just high-level plans, but continue on the decarbonization journey with them. And once they see that clear approach, the real data supporting it, that's when the real progress starts.
Yeah, thank you, Samantha. Samantha, the most important part, I think, what you understand, the shift has now happened, which we have been waiting for a very long time. It has now become a business imperative, business problem. Businesses understand value and risk. And of course, they care about data. And if data tells them to do something, they will do it. And climate automatically becomes the beneficiary of that action. So thank you for your thoughts on that. And given the portfolio work you have done, I think you have some good real examples. Hopefully, you will share more case studies with us in the future about how this journey is evolving beyond the narrative, right? Beyond the narrative. And Chris, whenever I connect with you, I always remember giving that lead gold plaque to the mayor in Florida. I always remember that moment, that bright moment that we shared. So, and since then you're gonna full 360-degree on multiple portfolios. But today, with all that combination of backgrounds that you have accumulated in the past, I would say 10 years approximately, you have an informed and unique perspective from policy to implementation to finance. And how do we unlock net zero at scale? And from a financial industry that you are now serving very specifically, what are the opportunities? And is the language of net zero resonating there? And what are we doing there?
100%. I mean, finance is obviously the major catalyst here. First of all, thank you, Mahesh, and it's wonderful to be with you. I'm actually here in Arlington, Virginia. I'm at the Solar Focus Conference being held by the local SIA chapter here, and the energy and optimism of the people here, despite the headwinds, I think is really encouraging. And since you mentioned the combination of my backgrounds, I thought I'd really start there just to provide some context. I've really been working on net zero strategies for nearly 20 years at this point, and today serve as an EVP and the Chief Sustainability Officer of Climate First Bank. We're a transformational, new, mission-driven, certified B Corp bank that's really helping to finance decarbonization solutions nationwide here in America. But, I'm an unconventional banker, and most of you all know me from my work over the last 12 years in government, where my focus was how to enable different types of policies and programs and grants and technical assistance that can catalyze decarbonization of our communities, the energy systems, the built environment, our transportation, our waste, obviously many, many more. In the role at the City of Orlando, I was the Director of Sustainability and Resilience, and really it was about how to implement local laws and policies like building benchmarking and transparency, green building standards, the electrification of our downtown bus fleet, right? Expanding renewable energy on city rooftops. These were all examples of real strategies in that seat that we were moving the needle on. And one of the things I realized was that enabling financing mechanisms to help our consumers, our residents, our businesses to also move along this journey was absolutely essential in meeting our goals. And so we worked on enabling things like PACE, Property Assessed Clean Energy, not only the commercial side, but also residential PACE. We also worked with local CDFIs, a group called SELF, the Solar and Energy Loan Fund, to start offering low and moderate income households with low cost financing to make these improvements. And even our local utility, OUC, which worked on an on-bill financing arrangement to help home energy upgrades, right? These are all examples of financing tools that were really catalyzing the work. Then I transitioned to the U.S. Department of Energy, and I served there as the chief of staff in an office called SCEP, State and Community Energy Programs. And the focus there was how to enable states and tribal governments and local governments to really leverage grant funding and other incentives to accelerate the deployment of net zero solutions. And it was fascinating to see the way that federalism from the top down was working to really unify the overall vision around decarbonization and moving towards a clean energy economy. And now I'm, sitting in the seat where we're trying to enable banking and finance to advance the work, leveraging private capital, right, to finance solutions. And at Climate First Bank, since day one, our whole theory was, one, we're going to be a public benefit corporation, but two, we're going to focus on being net zero from day one and developing tools to help consumers and businesses do the same, right? In this ecosystem of financing tools, we realized that there was a big missing link into tapping into the lowest cost private capital on the market. And that's FDIC insured deposits. That's everyday people and businesses that are holding their money in these institutions and using those dollars more often than not, especially in your larger Wall Street banks, they're going against our values and against the mission of net zero and decarbonization, directly financing the next pipeline, the next fossil fuel project. And we realized that in order for us to have a meaningful impact in this movement, that we needed to create a real bank, a bank that uses our deposits to finance this stuff. And that's when our chairman, Ken LaRoe, our current CEO, Lex Ford, myself, and a number of others came together and started down the path of incorporating this bank and using finance as a positive change agent, right? So to quickly answer your question on opportunities, one, what we're seeing from our seat is obviously the decarbonization of the energy sector and the built environment through innovation. And I loved what Samantha just mentioned about changing our language and our diction to underscore the business imperative. What I say is moving from green premium to brown discount, right? We know that energy and buildings are the most significant contributors, right, to the climate instability that we're seeing, but it's also the greatest economic and job creation opportunity of the 21st century. And so if we just take buildings, when we're talking about energy efficiency and electrification improvements to a potential client, the goal is really thinking about financial stability of this project. It's the business imperative. We know that by driving down the use of energy and therefore and emissions, that's great. We're also seeing that there's a lower net operating expense for these properties, what we call the NOE, right? And it unlocks cash flows that improves the debt service coverage of the property. And that's absolutely critical when you're thinking about from a finance perspective, when we're thinking about lending to these deals. And what that does is it reduces the risk of non-payment to the bank, right, for that loan, and overall increases the value of the property. That's when we talk about financial stability and improving that through efficiency. Those are the key things that we're seeing from a lender's perspective that is underscoring that value proposition. So instead of, so essentially, in addition, we're seeing those improvements improve property conditions, they improve the marketability. And when you think about this, most real estate owners are still seeing these efficiency improvements as green premiums, as nice to haves, and not necessarily as the business imperative. And so instead of seeing them as that, we've started to underscore that inaction can actually lead to significant brown discounts of your property. That being that if you're not enhancing the efficiency of the base building systems and of your units, you're going to risk the value of that property dropping in the market substantially compared to others, especially when you have these local laws in Orlando, in DC, in New York, and Boston, and many of these cities, over 50 local governments now that have really stepped up to implement building performance standards and other building efficiency standards to really drive the needle, right? And so at Climate First Bank, we saw the opportunity of stepping into this and decided to create a joint venture. In fact, we launched what's called Sustainable Credit Partners, or SCP, and it's essentially a joint venture that does something very different. It essentially is a senior bridge loan for commercial real estate to move towards decarbonization, meaning it's a full takeout loan of the traditional mortgage provider with a commitment from that property owner that they're going to do a energy efficiency and decarbonization roadmap and identify interventions that they can do in order to get that property to be more financially stable. Of course, as properties are going to refinance in this market, they're more often than not going to be at a higher rate than they were historically. And so the goal here is to drive down the net operating expenses, increase that NOI, and ultimately drive the cash flows of that property to be more financially stable. So those are the big things that we're beginning to see. And I know that we're going to talk a little bit more about the opportunities of blended finance and public-private partnerships. That's another key area, as well as digitizing project workflows and using technology to cut friction and reduce cost.
Yeah, thank you, Chris. What I like is that when you were in Florida, in the mayor's office, you were doing citizen services. Now you're doing consumer services. I see that common thread, being able to look at the residents, because that's a big place where we have to make progress. And second thing that is, for a very long time, we have advocated in the green building space that finance has to take the charge, right? Finance has to drive the change, because everybody always makes a case about, I cannot find enough money, particularly in the current inflationary market, high interest market. This cannot become a concept that is ignored. So thanks for doing all the good work to make sure that people can still do things, because you are creating vehicles for them, programs for them through which they can get the financing, because we cannot miss another 5 years on the map. We cannot afford to. So we need to have those solutions. So thank you for the good work there. And I'm watching that bank from distance. Hopefully everybody will learn from your playbook. That helps me to the next evolution conversation with Bahar, where you know that the language of sustainability, the language of definition of green building, net zero, all of these are moving targets. They are evolving with more disclosures, more climate deadlines, and shorter time frame to tackle. And you've been an educator forever in this space, and you've done so much good work in educating the next generation leaders. So from their perspective, and from your perspective, how has the sustainability education evolved, and what are the opportunities there for us to drive the broader adoption and awareness?
Thank you, Mahesh, and I'm honored to be on this panel with my colleagues. And I want to give a shout out to Samantha. I am so proud of her because she's our alumni and graduate, and she is a product of our program. I have to say that.
That's fantastic.
And obviously Chris has been like forever our hero in Florida, and he left, but he is still. So I am very honored to be here. But over the past 2.5 decades, I really have been involved in sustainability education. And I've seen it evolve in real significant ways. The first early years, we really were focusing on environmental awareness, teaching the students, helping them understand why sustainability matters in the first place. But over the past decade, the emphasis has shifted to actionable solutions and measurable impacts. So everything we teach now is really grounded in performance, data, accountability, and resource efficiency. So when I think about the built environment education, to me, it means equipping the students with the tools and the skills they need to optimize the built environment. With emerging technologies for the past decades and voluntary rating systems like LEED and WELL, and now global network with for Zero, students can connect what they learn in the classroom directly to real-world outcomes like energy and water efficiency, occupants' health, carbon neutrality, and the next push is how to tie it all together to ROI. To kind of tie to what Chris was saying, how important it is, that part. The pedagogy has shifted too. Students now learn through hands-on and project-based work. They assess actual buildings, communities, and cities. And increasingly, I see at least myself in this space to develop and design new courses based on the market's need. So students gained the experience and the technical skills the industry is actively looking for. In many ways, or thinking about it, it has become, in my book, is more workforce development, offering these courses and training in higher education. I have heard from employers that have hired our students who have taken these courses and they learned these skills, that we're basically saving them 6 to 8 months of training compared to a fresh new graduate from a university. So over the past decade, sustainability education has really shifted from awareness to more applied leadership. It is about preparing the students not just to understand sustainability, but also to lead its implementation locally and globally. Now, the world is a very small place and we are everywhere. But they do that with evidence-based, human-centered, and measurable outcomes.
Yeah, I love that notion of moving from awareness to applied leadership, because awareness was important 30 years ago, 20 years ago. Even now it's important in some places. But being able to prepare the students to make the business case, to speak the business language, to really find their ways, not to make this as an optionality, but really bring the skills, talent, and also be able to communicate effectively to their stakeholders to make the business case is very impressive. And I also think that what you touched on is very, very important. Now the world is a bigger place, but it's very small in terms of its connectivity. So there is nothing that is, part of the premise of creating Global Network for Zero is that nothing constrains somebody in Florida to be helping somebody in China and vice versa. That connectivity can happen naturally if there is knowledge, because knowledge gap and skill capacity is something that everybody is still lacking in our movement. More work could be done. And then I love the notion about workforce development, because at the end of the day, when we think about the US itself, being able to develop the next generation workforce with starting point knowledge on environmentalism, specifically related to net zero and all, becomes a vocation that everybody can take to the next level. So I do agree. So thank you for all the good work you've been doing, Bahar. Keep pushing for us, and we hope to collaborate more with you on that one. Samantha, Verdani, with your fearless leader, Daniel, everything is top notch, right? So of course your case studies are also top notch. So what are your favorite net zero case studies, and why they are so special?
Yeah, thanks. And I just to go back to Bahar really quick, I did graduate from the program that she spearheaded, and I believe I was like the second graduating class, so there was still a lot of learning curves, but at the time it was very new. Like I think I was one of the few that graduated with my lead GA, and I knew the basics of energy modeling, like stuff like that. That I think that really set me apart from others. So I definitely, Bahar is a big reason as to why I am here where I'm at. So thank you. But yeah,
I think you'll be invited. Based on this, you're going to be invited to come to the next class and do a case study. That's possible.
We've done that before. Like we said, it's small, so we do webinars and things. But yeah, in general, I mean, at Verdani, we're very, very excited about this work. We find it extremely compelling. A few projects that stand out because they really show that decarbonization can scale across diverse portfolios, and the business and climate cases kind of reinforce one another. One example is a global real estate investor where we built a portfolio-wide decarb roadmap that spanned hundreds of millions of square feet. We combined, lead O&M performance data, GRED data, CREM transition risk modeling, and capital plans to kind of pinpoint which ones were their highest emitters and sequence cost-effective upgrades. And that led to measurable reduction in carbon intensity and stronger sustainability performance scores, which directly improved the investor confidence. So it kind of showed how a clear pathway can impact the emissions of an entire portfolio. And then another project that we loved involves a Class A office asset that embraced like a multi-year retrofit strategy, just to go a little bit smaller scale. They installed rooftop solar, they modernized their HVAC, they included operational improvements. And so that combination reduced carbon emissions intensity in by over 15% in just 3 years. And on top of that, the property earned Energy Star certification, LEED v4, O&M Gold, and then later went on to receive WELL Core Silver. And so that kind of shows that high performance, occupant well-being, and carbon reductions can absolutely kind of coexist together. And then among most of these projects, you'll see the theme is the same, and I'm sure the other speakers will speak about it too, is that decarbonization action isn't a sacrifice. It's more of a pathway to better performing, more valuable buildings, like Chris mentioned as well. And so the clients who really see the results are the ones who pair strong technical strategy with hands-on implementation. It's not so much just planning anymore. And so that's what transforms decarbonization from reporting exercise into measurable financial and operational gains in both cases.
Yeah, so there's a lot to cover there. And just the typical thing that I ask always in these conversations, that how do people access those case studies if they're public? Where do they go to get those case studies? Can they reach out to you so that they can share knowledge, they can get your help?
Yeah, certainly reach out to me. I'll put my email in the chat.
Yeah, that'll be of help if people have specific questions. Thank you very much, Samantha. Chris, we talked earlier about, in fact, you talked earlier about the opportunities for the finance industry to power net zero and how you're doing it. But what is holding the financial sector back from leveraging its full influence, right? I mean, Climate Bank's playbook is an obvious playbook as far as I'm concerned. So in simplest terms, what are the obstacles? What are the barriers? And why and how Climate First is doing it differently? What obviously when compared to the mega banks, you are just a startup bank, although you have done a multiple startup banks, but still, why everybody's not getting into your business right now? You're on mute, my friend.
Apologies. When I was at the Department of Energy, I mentioned that we would have this mantra that, the whole goal here is to turn billions into trillions and to enable, to drive a government-enabled but private sector-led transition to a clean energy economy, right? When you look at financing for decarbonization, it continues to grow year over year, right? In fact, last year we saw a new height of over $2 trillion. And for the first time, we saw 2 times more being invested in clean energy than fossil fuels. And so we're seeing some positive trajectories, but I think to meet the scale of investment that's needed, right, we're going to need somewhere between 4 and 9 trillion, I think, per year in order to drive the decarbonization worldwide, right? So meaning we need to find ways to continue inviting private capital to the table, because governments and philanthropy cannot even come close to doing this alone, right? And so a few key challenges. One, obviously the volatility of policy landscapes and the over-reliance on tax credits is shaking things up. And we're seeing that, especially over the course of the last 6 months, I'd say, since the passage of the OB3. These market swings around consumer clean energy incentives are creating challenges for the lenders in a couple of different ways. And primarily on cash flows and ensuring that these credits can be monetized as part of the repayment of these deals, if not needing to think about how else to minimize the risk on the loans. At Climate First, one of the things we decided to do when we started this bank was commit ourselves to developing these products that were not dependent on any government incentive, right? Solar loans is one of our most popular products. And we know that solar has been driven off of this incentive model of getting this tax credit. And we realized if we could figure out a way to design this project almost like a mortgage, I call it a mortgage style clean energy loan, because what it does is it provides a 30-year term on a clean energy asset, which by amortizing that far helps to drop the monthly payment to be as affordable, right, as possible. It's as close to a utility bill replacement from day one without incentives as you can be. And in many markets, it's cash flow positive because of that term, the low fixed interest rate, and the elimination of a bunch of these fees, dealer fees and prepayment penalties and other aspects that make the consumers affordability in question. And so since our inception, because of that approach, we have financed over 8,400 individual households across 44 states here in the United States, over 150 megawatts of rooftop solar, and none of them have used the tax credit as a repayment to lower their fees on the loan. And it's primarily been, a very resilient product. And we anticipate that in a world without this tax credit, we'll continue to gain market share and offer consumers and businesses direct lending. Number two, I'd say, especially on the energy efficiency side, right? Project finance for energy efficiency and electrification is in a category of itself. With an exception of a few examples, they don't yet meet the requirements of the capital markets. And what I mean by that is, as a bank, when we're originating these loans, we're holding them on our balance sheet, right? And at a certain point, we run into one of three issues. We run into enough capital to fund these loans, enough liquidity to meet our requirements from FDIC and the regulators, and the concentration risk of the amount of loans of that given type of lending, right? And so what regulators want to do is make sure that you're fully diversified in that portfolio and you're not overdoing it too much on one type of loan. So what that means is we at some point need to begin to securitize and sell those into often the capital markets or a secondary market of specialty finance firms. And that becomes really, really challenging. The securitization of these deals becomes very high risk to the bank that's looking to get in the game at scale. And so what are we doing about it? Well, Climate First, we've begun to build relations with specific climate-focused, decarbonization-focused specialty finance firms, these firms who want to be the long-term balance sheets of these types of loans, and working with them as we're developing and designing these products to ensure that it meets the envelope that they want to buy, right? And that we can find this pathway to capital and liquidity for the bank. If we can do that for ourselves, we then create a model for other banks and financial institutions to do that at scale, right? The last thing I'll quickly mention is the mixed signals that we're seeing of banks and other institutions and their commitments to net zero. It's been very disheartening to see the rollback of the Net Zero Banking Alliance. If you weren't aware, this was an international network, came out of the Paris Climate Agreement to essentially mobilize the banks to commit to those global climate goals. And just recently, they decided to dismantle the Net Zero Banking Alliance and make it more of guidelines. I want to let you know that we are fully committed, not only to those, to those goals, but in our DNA to using the bank as a force for good to drive decarbonization. And I often get asked, are we planning to change our name, right? Climate is literally our first name in this environment. Are you planning to do that? And what I say is we remain committed to our mission and to our values. And whether this alliance exists or not, we're going to continue to publish our annual reports, provide full transparency to our customers about our emissions, and work to continue scaling clean energy lending nationally to demonstrate that it could happen even in a regulated bank.
Yeah, that's awesome. First of all, kudos to you, for not changing the name. Then the charm will go away. So you have all been a climate bank forever. So keep it going. And I like the today you touched on some of the key topics that we have discussed for almost 2 decades now. Like how do we decouple the tax incentives? So we move from green premium to ground discount. That's one type of decoupling. The second decoupling is really not make people do things just because the government gives them money, but do it because it's the right thing to do. It makes the business sense. It is about risk mitigation, and it is about long-term planning and protecting our planet and people, right? So doing the right thing is very, very important.
And resilience, so all of that. Yep.
So that's awesome. And also, yes, the Net Zero Banking Alliance, I liked your particular point about we cannot be opportunistic in defining our charter, right? Today, if the political climate is not favorable, so immediately we change our charter. The next year, if it is favorable, we'll get back to that old charter. That type of inconsistency creates skepticism in stakeholders' mind,
yes,
which we should not do, right?
Correct.
So you
that
have to
volatility.
believe Yeah,
Absolutely.
that doesn't help. That doesn't help.
No, it
Particularly the momentum that's built every single day gets compromised, and then we have to do extraordinary efforts to rally the troops again. That doesn't make any sense, particularly given the challenges we face with climate. So, and we don't have $4 to $9 trillion, so we have to figure out how to keep this faster, smarter, quickly fixed.
True.
So thank you for that, Chris.
Speed and
So,
scale, right?
yes, yes. So talking about fascination, we have to go to Bahar on this. Bahar, you're doing a fascinating project with your students right now in partnership with our work, helping us to make our case that working with students to really do the data collection for the University of Florida campus. And so if you could just talk a little bit more about what is going on in the class and how you're actually guiding the students to do this class and what kind of challenges you face, what the students plan to learn, and how this could potentially become a replicable story for us to take it around the globe.
Yes, actually, it has been a very exciting semester this fall for us, because I have been thinking for a long time, what is the next step in this journey that we started, like at least I started 2.5 decades ago, and how we go above and beyond what we've been doing for the past decades. So when I was introduced to Global Network for Zero last July, I immediately saw it as an opportunity for our students to learn something new and highly impactful. You all know that I have been teaching Lead Lab since 2014 and Well Practicum since 2021. And those hands-on experiences have completely transformed my teaching and my students' learning. They gain real skills, real knowledge, and even credentials that really helps them make an impact in the market. So when I learned about Global Network for Zero, I knew it will add a different dimension, a deeper understanding of decarbonization and performance of what we've been doing for a long time on these buildings. So through this project that we're working on this semester, my students are learning about things that they really have not known before, like scopes 1, 2, and 3 emissions, CO2 factors, how they can conduct scopes assessment, how they develop a net zero plan to take the project that they are working on to the next step, all the way to the net zero certification. And at the same time, this basically empowering, really giving the opportunity and empowering them for improvement and communicating their findings in ways that is really drive change, a real change right now at this day and age. And the outcome so far is going really beyond the classroom, because we are creating a model for how organizations, buildings can track and accelerate their progress toward net zero, utilizing Global Network for Zero platform. But we are empowering the next generation of sustainability professionals to make data-driven, high-impact decisions in their career. So this semester, I've been really lucky. I have 14 master students and 1 PhD student that they are working on the application of Global Network for Zero to different type of buildings. And these buildings are not really just local. These buildings are in Pakistan, Dominica, and from across Florida, from hotels to residential to commercial buildings. And my PhD students submitted a paper to the International Network for Tropical Architecture conference on a framework for net zero certification of traditional heritage building in Saudi Arabia. And the paper has been accepted to be presented at the conference, and we are really looking forward to that. So when looking at my students and the class, like transitioning from the way we have been doing things and looking at sustainability, efficiency of buildings, health and well-being of the people in the building. The Global Network for Zero is teaching them something very different. And that's really energizing my students, and they are really interested in learning more about it using this platform. So in short, they are really not only studying about optimizing the built environment, but they are practicing it in real time. And with this, this has really an experience this semester, the first time I'm doing it, it has become really transformative for the way I teach, at least. I'll talk for myself. I teach and then see my students, how they are learning and how they are excited and motivated about this.
Thank you, Bar. When we talked about the lead lab, that was a original vision at that time. And then you stepped in and you actually showed that how this can be a practical program, right? When people get out of the college, they are well equipped, because you're also giving them the course, the teaching, the experience, and also an asset to work on. That's very, very difficult sometimes for particularly young leaders who are coming out of the college campus. So being able to do this again, all over again, for net zero, working with us and giving us that opportunity to use your platform to tell the story, particularly with buildings across the campus, is something that I'm very excited about. And also 14 master students and 1 PhD student. That's a very nice class to graduate this year on this particular subject. That's awesome. And there I want to put a plug. First of all, I'm a little selfish because I'll get 15 more speakers like Samantha in my 15 more webinars. So they will all come back and share experiences in the future. Second thing is the PhD students, we should do a case when your paper is accepted and presented. Maybe we'll bring it back here and have you present along with the student to see what we learned, or maybe your entire class can present. We will try to plan something. I'll make a note on our side and try to organize something for the greater good. So thank you so much for the good work there. Exciting. And I'm planning to come to your campus to come and see it in person. So that's one of the goals I have.
We'll love to have you.
Thank you very much.
Let me know when you go. I might stop by too.
Yes. We'll do. We'll go together. So Samantha, this brings me back to a very interesting question to you. Verdani is doing great work. You're doing great work. Your colleagues are doing great work. So what will be game changing for an organization like yours, which is enabling so much of transformation on the ground, particularly net zero transformation? What's in your wish list? What should not happen around you? And what are the perspectives you guys are doing on a daily basis, or at least seeking on a daily basis?
Yeah, I think there's there's many, but I think like two big things that can really accelerate this net zero transformation have begun is, first and foremost, I think collaboration over competition. Net zero, obviously cannot be achieved in silos. As we've learned, it requires designers, operators, utilities, lenders, engineers, tech partners, sustainability consultants like us, to kind of work together in coordination. And that's where sometimes our industry, I feel like, gets stuck. Net zero timelines are obviously non-negotiable, and our ability to assemble multidisciplinary teams quickly will determine how much progress will be made by 2030. And so that also means embracing AI and emerging tech rather than fighting it. I know AI has been very disruptive, but only if we resist it. When we used well, it reduces analysis time, identifies high ROI projects faster than we can, standardizes decision frameworks, and frees teams to focus on implementation rather than focusing on spreadsheets, right? And then I think second would be standardized interoperable data. So right now, owners are drowning in data, but starving for insight. And so sometimes we spend too much time reconciling utilities, emissions, climate risk models, climate capital expenditure plans, and reporting frameworks across very disconnected systems, like you spoke about at the beginning. So what would kind of change the game is an interoperable audit-ready data that supports utility performance, carbon accounting, climate risk, and financial forecasting, like all in one place. And not necessarily having like perfect data, but the right data in the right hands at the right time, right? Because here's the thing, if data only matters if it leads to decision making, right? So we call it like data enabled decision making. You can compare it to like taking your blood pressure every day. You can track the numbers religiously, but if you never change your diet, you never exercise, you never take medication, then it's just numbers, right? It doesn't really mean anything. So buildings are the same way. Perfect data is going to be impossible. You know, there's always a new acquisition, tenant splits, shadow meters, utility gaps. There's always going to be something missing. So sometimes clients get stuck thinking that they need all of the data before taking like any action, even minuscule action. And so waiting for the perfect data is kind of what slows our industry down. Progress happens when we have enough to feel confident that we can act. And so I think we as an industry kind of created this problem ourselves. The push, you know, before was always pushing for better data and better data. And so now that we have it, we need to use it, because data only matters, like I said, if it leads to better decision making, right? You can only make those decisions with what you have available. And so we need to start using the data that we fought so hard to collect and making those informed decisions, budgeting appropriately, and partnering across the multidisciplinary teams so that we can help clients move further and faster. I think would kind of be the two main things there.
I think they're also interconnected in my mind. The first feeds into the second, right? Because the data is always going to be scattered. So AI helps you to keep that unified perspective on data. And I like the way you talked about, I think we don't need the perfect data, and we have to have confidence that we have enough data to take some of the actions that we need to take to make the changes that we can make in the immediate future. Of course, you can fine tune it. Nobody's asking you to compromise quality. Rigor and quality cannot be compromised in our work. But that doesn't mean that perfect needs to be the enemy of good, you know? So there is a balance we can all strike. So that's great, Samantha. Now I will go to Chris. You know, we are almost coming to the end. So we'll try to wrap it up with Chris and Bahar. Thank you, Samantha. Thank you so much for your valuable comments on that too. Those two perspectives. So Chris, thank you. Chris, you know, you did this fantastic op-ed with us on private capital and blended finance. So it feels like a mini masterclass fit in about 500 words. So how about another masterclass on that subject in about a couple of minutes for this audience, maybe a few minutes, so that then more people can learn about it and then probably help you scale that impact on the ground through their actions.
Yeah, and specifically, this is public and private partnerships. How do we scale those? And that's something that I actually help lead at the bank, among other things, is our strategic partnership development, specifically with other financial institutions, groups like credit unions and community banks and CDFIs and philanthropic foundations. These are all institutions that I'm trying to connect with across the country, with the ultimate goal of finding concessionary capital, blended financing that could be braided in with our private capital and used to enhance the affordability and the accessibility of financing decarbonization and net zero solutions, right? How do we make it easier for people to access and make it more affordable for them to move in the right direction? And so I have a couple of really cool examples of what we've been doing to develop these public-private partnerships. Here in the DMV, we have a partnership with a county in Maryland, Montgomery County. Specifically, they have a green bank, a very unique model where they take a portion of the energy tax revenue that they collect every year, and they fund a quasi-governmental green bank. And that bank is not a depository institution. It's not holding our deposits, but it's intended to use that public money as concessionary capital, as this catalyst to find other capital like ours and drive affordability of clean energy. And so they approached us in middle of 2024 and had an idea. They were traditionally doing more commercial financing, helping businesses and more C&I solar and even community solar stuff. But they wanted to also help consumers. And what they realized is they didn't have the technology, the network of contractors, the ability, the capital to deploy at that scale, the ability of servicing those loans. And they approached us and they said, what can we do together as a public-private partnership to leverage our money? How could you, as the bank, use our capital to drive ultimately more adoption for clean energy in our county? And what we did was create this partnership where ultimately the Montgomery County Green Bank parks funding at our bank, a deposit, right, at our bank in an escrow account. And that account is interest bearing. And so at least it's making some money as that cash is parked. But as we go out and originate clean energy loans through our network, right, of these installers and contractors that we've, onboarded onto our platform, we're able to bring in essentially that green bank money as an interest rate buy down. This concept of an interest rate buy down is a very important mechanism. It's a credit enhancement tool that will take our 30-year 8% fixed loan and make it a 30-year 4% fixed loan for every single resident in the county. And if you are low income, if you're at the 100% of the area median income or below, it's actually a principal only solar loan. So the customer is getting a 0% interest loan from Climate First Bank. And the Montgomery County Green Bank is using some of that public money to buy the interest rate that normally the customer would be spending on their loan. And instead the Green Bank is spending. And so that's a win-win-win situation, right? The bank's deploying our capital. The Green Bank is using their money as a source of blended finance that is reducing the interest rate for the consumer. And so the consumer gets a slam deal of a solar array that is literally saving them money from day one when they even incorporate the loan payment that they have for us. And those are the types of partnership models that can really help really scale this work. Another one really quickly is loan loss reserves. We're beginning to see foundations, family offices, and other green banks think about using their money not as an interest rate buy down to make the loan more affordable, but more as a loan loss reserve. And what that does for us as a bank is it helps us modify the credit policy. It takes my minimum FICO score of 680 or above for solar loans, and it can drop that down to a 580 or a 550 in certain markets and use that loan loss reserve money as a default backstop. If somebody defaults on that loan, we pull from that loan loss reserve and we make the bank whole so that the bank doesn't lose money in offering this loan to a more risky consumer, right? And that's the whole idea around public-private capital and being able to bring those dollars together to, again, drive the affordability or expand the accessibility of who can access clean energy and who can actually finance these deals. And lastly, I'll say that it's fascinating to see, especially this year, a change in family offices, in foundations and philanthropy, groups like Milken Institute and Waverly Street Foundation and Kresge Foundation and many others who are stepping up to say, hey, we realize the power of private capital. And if we use some of our foundation money instead of as grants, and we use it as these credit enhancement tools, we can really begin to turn billions into trillions. And that's one, I think, way that I'm looking forward to continuing to scale across the country. We have 50 green banks that have been created across America today, in states like Ohio and Utah and Nebraska and California, I mean, all over the country. And so my goal is to figure out ways to partner with those institutions and continue to scale the good work around decarbonization.
Yeah, Chris, that's great. That's a lot of information. And I think you have opened up a great platform here for other people to also engage, because there are many creative ways for people to engage, either through creating a demand or being on the supply side or being potentially the conduit for the bank to be able to promote these programs. Those opportunities exist in this network. Having said that, I was about to ask you, I think you already touched on it, but just to be explicit, do you see this model getting replicated? How optimistic are you? Is it just going to be just Climate Bank doing it, or do you think that this concept will start propelling in the country, and in the next couple of years we'll see a good momentum?
I think we're going to see a very good momentum of other institutions. And part of the reason why I say that is because we're already beginning to license some of the technology that we're using at Climate First Bank to do all of this great clean energy lending to other institutions that didn't have the technology, right? One big reason that we're a bit different and unique is that we have a sister fintech company known as One Ethos. And that company, separate from the bank, has built a series of technologies, 8 different things that we're using at Climate First Bank every day, from loan doc preps to contractor verification and onboarding, right, to a number of other tools. And now we're able to start licensing those. We're helping other green banks, we're helping other credit unions build their green lending muscle and begin to take these models to a different scale. I'm not naive in thinking that Climate First Bank can finance all of the decarbonization that we need. We don't have even close to the amount of capital, right? But if we can create a model and the technology that other institutions can use to do this and replicate, that's a recipe for success. And that's exactly our approach.
Yeah, and Chris, thank you very much. I believe you touched on this digitalization earlier. Looks like that's coming handy here. And the second thing is that there's an ask on the audience for you to share your contact. If you feel comfortable, please share your contact and your web info when you have a second. Thank you very much, Chris. That's exciting. Thank you. And we'll wrap this panel with Bahar's last input. So, one of the fascinating things in today's conversation is that the dialogue that you had with Samantha, just being able to say, hey, Samantha, thanks for being the alumni and being on the same call, trying to talk on from both sides. That's fascinating. So thinking about that concept, and what is the best way, in your opinion, to activate students to champion for net zero by making it personal to them and really taking their passion that you see in their classroom, because I have spoken to some of your students, and of course, with Samantha in the call, that passion is there. How do we replicate that in the outside world? Any thoughts and perspectives you have before we close out?
Yes. So in my experience, the best way to activate students to champion any cause, in this case, we're talking about net zero, is to make it real and make it theirs. Students are incredibly motivated and innovative when they can see the impact of their work, not in theory, but in our cares, in actual projects, actual building, communities, and cities. So this is how I look at it. The first step is giving them hands-on project-based experiences where they can assess real buildings and they look at real emission data, utility data, they look at real challenges. When they touch the work directly, I have found the learning becomes very personal to them. They begin to see their role not just as a student, but as an emerging professionals who can influence the outcome of the work that they are doing. The second step, I would think, like help them connect net zero to the things that really matters to them, like health, resilience, economy, community well-being. When students understand that net zero is something that improves people's lives, it becomes meaningful on more a human level to them. And then a third step, I would think, and I believe, we need to frame this as a career development and leadership training in higher education. When students realize their skills are what the market is asking for, and they can be a leader in this space, their passion grows and really their innovation emerges. And finally, I would really want and think that we need to create opportunities that extend beyond the classroom. So, for example, internships in the space, research, industry partnership, professional credentials, all of this can help them and reinforce the idea that they can make a difference right now at this time, not any other day, someday in the future. So I think the one thing that we need to think about it, if the students are doing this great in the classroom, how we need to think about it and replicate their passion when they leave and graduate and outside the world? What do we need to do? I believe we need to give them the confidence, the mentorship, the tools, and the lived experience to see themselves as part of the solution. When students feel the ownership, when they see the impact of their work, they naturally become champions for net zero or anything else if they are interested in. And then not only for in that area, but they become champions in their career for this cause, in their communities, and in their world. So just focusing on these few steps, I think it will really transfer that passion and commitment from the classroom or the higher education to the workplace.
Thank you so much, Bahar. Keep it real, keep it personal, and keep it open. That's what I got from your summary. So I really like that. On that high note, we'll wrap up this panel. Thank you so much, Bahar, Chris, and Samantha for your absolute, sound advice and sound perspectives. So please stay tuned. We'll continue to engage you in further dialogue. Thanks again for sharing your perspectives. So now moving on to the second panel. Thank you. Now, in our second panel, we have, we have discussed the expertise in finance, education, and next generation leadership that demonstrates achieving net zero requires far more than technical solutions. So it requires leveraging finance innovations that unlock action, as Chris pointed out, identifying education and training needs that fills the skill gap between where we are today and where we need to go, as Bahar pointed out, and engaging our youth and youth leaders to push for action, and which leaders like Samantha are already doing. So these ecosystems can drive change. So based on that context, we'll introduce our new presenters for the second panel. Our GNFZ advisor, Eric Corey-Fried, Principal and Director of Sustainability, Canon Design. Another GNFZ advisor, Susan Hain-King, Senior Vice President, High Performance and Sustainable Construction, Pepper Construction. And our good old friend, Sarah Goodman, Principal and Practice Lead at Branch Part-Time. So we will start with Eric. Eric, how are you?
Well, I can't complain.
Welcome back.
I mean, I can. I'm in this, probably like many people listening, I'm in this weird spot that on the one hand, I'm the most hopeful and the most clear on what we need to do to get where we need to get, but at the same time, pretty depressed at the current state of the world and kind of struggling with that on a daily basis. But otherwise, I'm fine.
Fantastic. Keep the optimism up, because we need all of it.
Yeah.
With that, I'll give you a little bit of a motivating probe, so we can get your energy moving. What innovations, whether in materials policy, design, construction, everything that you touch, are you most excited about right now in terms of their ability to move the needle in a significant way towards net zero?
Oh, well, there's not just one. So I'm pretty excited about bio-based material, biogenic material, ag waste material, anything that we can grow. That's always been kind of what I've been a little obsessed with. If you've ever seen one of my TED Talks, it's always about how we can grow living materials. So for the last, 15 years, I've been obsessed with that. But I'm also been lately obsessed with what I call these illustrative metrics. Here's what I mean by that. I think the last webinar that we were on together, I kind of talked about how we failed. Net zero failed. It failed to have the scale and the impact that we wanted, and we kind of ended up in the exact spot we didn't want to be. We've been using these illustrative metrics, however you want to say it, to talk to clients in a very interesting way. In other words, I'm not here to sell them on net zero. I'm not here to sell them on zero emissions. I'm here to sell them on the outcomes and benefits that those things provide. And so a typical illustrative metric for me might be number of children playing on campus, right? Because that would be an indicator of a much larger set of strategies that are much more complex. One of the indicators that we're using is the decibel level of laughter in the hallways of the children's hospital. Because you have to remember, everybody coming to the children's hospital is terrified, right? So if you're hearing laughter as you're entering the building, that's a good thing. That means a lot of other really complex things are working. And so we're using these illustrated metrics to get clients sold on the larger picture around net zero energy, on healthy buildings, zero water, zero waste, and so forth, but in a way that really builds momentum and support. So I'm a little obsessed with that right now. And then also, just as a third bucket, you know, I was listening to Chris, who's, you know, so smart and impressive, and Samantha, who's so smart and impressive, and I'm not. You know, I'm an idiot. But I just learned about this concept called parametric insurance, and companies like Swiss Re are using it to invest in nature-based solutions. And this could be something that could completely upend that entire business model of the insurance industry, because the insurance industry is about to rewrite the geography of the whole planet of where we live. And those of you living in Florida already know what I'm talking about, right? So, and Chris is from Florida, so he knows. So those are the three kind of big buckets of things that I'm obsessed with. I don't know if I answered your question, but
you know, it's a you did, and most important part was to actually show that there are ways to not take this complicated subject, not boring, but more fun, more practical, connected back to the purpose of the work that you're doing. I think that's where really we can see much success. Otherwise, people tend to pick and choose. But if you speak their language, you contextualize that for them, hopefully the buy-in process becomes a little bit more smooth, and we are able to demonstrate value. So definitely, most definitely, that comment helps, and that thought process also is very, very important for all of us to adapt. And now, you know, we'll switch our conversation to Sarah. Sarah, nice to meet you after a long time. The industry talks a lot about net zero as a destination, but I think Eric also pointed out, I also believe that it's a journey. So from your perspective, what is the bigger opportunity in design, and how we design, and how we can actually use design process itself, and the change in design process itself, to identify those opportunities? And in your mind, how the design process has evolved to stay adaptive to technologies and climate reality shift, you know, in the work that you do. So what are the things that you are saying, and how is design helping, and how design has to change to help us even further?
Yeah, I think it is a constant evolution, and we all have to continue learning. And I wrote down parametric insurance because I was like, here's something I can look up later. I think we all have to be ready to shift our thinking and constantly learn and evolve, and have fun along the way too, right? Like if we're not having fun or having a good time, then what's the point? But it is, I like that you framed that as an opportunity, because I mean, even back to Eric's question, it's not just one thing, it's lots of things. It's not a single technology, though there's a lot of cool stuff happening and new things popping up every day. I think what I continue to be interested in is designing for change as the default, right? Change is the default condition, though it's uncomfortable for us also as humans. We're going to have to get more comfortable with it, because you know, the world that we designed for today will not be the world that these buildings are operating in 20 years from now or 10 years from now, right? We got climate shifts, loads are changing, occupants' needs are constantly shifting, and then there's all this like technology and code and requirement that's overlaid on top of that. So like adaptability is really like a key driver for me. And I think instead of, though we want to forecast the future, we just need to like embed this adaptability into our design process. So it's like we want to stop designing for static conditions, right? Start designing more for resilience and shifting in terms of what we can expect externally, and you know, predict and control internally about like temperatures and humidity. And then we look at things like grid emissions and weather extremes. And I think that, you know, we want to again shift the design conversations to systems that can be tuned or phased or swapped or changed without these like comprehensive whole scale gut renovations, and thinking, you know, modularly, thinking about hydronic systems, and then, you know, going back all the way to like envelope first resiliency measures that give future buildings the opportunity to evolve. And, you know, we're still going to talk about getting interdisciplinary early if we can, right? All the things that are all connected, all the systems, you know, the buildings are systems of systems, and continue to break down those silos. So ultimately, I also don't want to, and we've had some conversations even this week here internally. We get on these like technological deep dive focused topic rabbit holes, but we need to remember that all of this, for the most part, is people driven, right? We're designing for people. Buildings don't adapt and won't adapt until we can get like owners and operators to fundamentally understand them. So it's the analogy of like, we need these buildings and the people that are ultimately experiencing them and running them to be able to like walk first. So if net zero is like a journey, we want these buildings to like learn how to walk first before they can like run towards the destination of net zero.
Correct. Now, I think you underscored the most important point I was about to ask. While all these dimensions of design is evolving, and I'm pretty sure every designer is trying to incorporate as much as possible, particularly the shift towards the resiliency, the shift towards really looking at innovative concepts. But ultimately, you are designing for people. And that's something that doesn't get compromised. And that's where the buy-in happens. That's where the adaptability has to happen. Otherwise, that design won't scale, or at least won't get implemented properly, right? So, and of course, with the net zero, incremental works. We can be big on the goal, but we can make the daily incremental progress that we need to make, and that'll be something that we can do. So thank you for that. I will, move on to Susan here. Susan, you work in the construction sector. So as soon as we say net zero, it becomes challenging because you have many challenges at the construction site in the construction process towards net zero. So from that perspective, what are the biggest challenges there? How is the construction industry actually coping up with all of this in being able to put net zero solution and construction in the same line? And obviously, what are the opportunities and how are you addressing them at Pepper?
Right. So I think right now, general contractors, we're talking about the workforce shortage that we're facing. So if you look at the Bureau of Labor Statistics, 20% of our workforce is over 55. And then if you look at the median age of our workforce, it's 42. If you compare that to tech's median age is 31. So all of, the younger generations kind of coming into their professional careers, like we don't have the young generations coming into construction as we once did. In order to fill the demand gap that construction has, we have to add 500,000 people annually, which is a big push because we need to start attracting younger generations that actually want to go build these net zero buildings. Now, we understand that the younger generation is a little bit more on board to sustainability, green building, net zero, which is fantastic. But the older generation of contractors sees net zero as complex. And if something's complex, that means it's more risky. And if something's more risky, that means it's going to cost you more money. And then we get in that whole cycle of value engineering because contractors are very conservative. They don't want to do a lot of risk. They want to make sure they're covered. Where I think the opportunity here is education. Because if we can kind of make net zero not as perceived as so complex and so high tech, and maybe kind of simplify like what actually makes up a net zero building, what are those components? I think that we can actually get more adoption in those older generations that are still building buildings, and then they're teaching the younger generations or the apprenticeship or the apprentices that are coming on board to start adapting net zero strategies, and then we start pricing them out correctly. And if we can get trade adoption through the education and apprenticeship programs, then we're going to be able to scale net zero across the board. Now, the AGC, which is the Association of General Contractors, kind of think of it as like the AIA for architects. They have an education program that's kind of the building blocks. Part of that education program is green building, which is great. But if you go and you look at that curriculum, it's not net zero. So now we need to have somebody go through the AGC and say, okay, what is the process for updating your curriculum to start kind of breaking down those net zero components so that when somebody does start say, okay, I want to go into the trades, they start learning about net zero early, they start understanding what these strategies are. So it's not daunting after their apprenticeship or they've built, 5 conventional buildings and all of a sudden now they're on a net zero project and they don't know what that means or, how that scales on what, they're doing on their day-to-day job. So I think that's the opportunity for education.
Yeah, I think, it's loud and clear. The shortage of workforce is very high, and making it attractive for people to join, that's another big challenge. Third is that obviously construction is a segment or industry, whichever way you position it, needs to be risk averse, right? You cannot introduce risk in the process. So anything that even creates a perception of risk will slow things down because obviously not only cost, but even approach and everything else. So I think those are very, very important points to reflect on. And one question I wanted to just do a follow-up based on your comment is that in your personal experience, this is just your view about this, is the net zero execution during construction really difficult? Or is it just our narrative problem or how we communicate or education is missing? Is it a real difficult thing?
I don't think it's a difficult thing at all. I mean, we've built several net zero projects. What I think you face is, well, we've always done it this way. Why are you asking me to do something different? And it's the contractor way of like, here's my knee-jerk response. You're asking me for something different. I don't understand it. I'm not educated around it. So I'm going to build a wall and I'm going to fight you, right? And I'm going to tell you it costs too much because I can VE this out of the job. And so I think like it's that educational piece where it's like, you can break it down into no, this is literally just X, Y, and Z. We're just, we're looking at the envelope and we're having a higher R value, or we're looking at the mechanical and maybe we're doing geothermal and here's what geothermal actually is. Here's what a heat pump actually is. And just breaking it down to its simplistic forms, like that's where you're going to gain, more distance down that net zero path.
Got it. It's basically demystifying the facts and really, really helping people to understand that. That's where the education plays a key role, obviously, right? Education is a big part of it to even drive the change management that you are talking about. So thank you, Susan.
Yep.
Eric, Eric, the question, since we talked about some aspirational stuff and fun stuff, let's get to the real brass tacks, which is, embodied emissions need to be less, embodied carbon has to be less. You make a lot of design decisions. You're in business development. You're convincing clients all the time. But from a designer's perspective, how do you balance embodied carbon emissions with operational energy? How do you do that? And what are the challenges?
I just went through kind of an interesting experience with a client. This is a client in Seattle. So Seattle's in King County. King County is also they've always been very innovative in terms of sustainability and embodied carbon and operational carbon. And the client has what I call top 5 in their industry. And yet they were still resisting on electrification. The electrification thing became an agenda item for meetings, right? Like basically me arguing that we need to electrify the building. And I wasn't getting anywhere. So I want to show you guys something, if I can share my screen just for fun. And this is kind of the epiphany that I had, which is very subtly that emissions equals death. They were not interested in the energy story around electrification. What finally got them interested in electrification was health, because what I ended up, just out of frustration, what I ended up saying is, we're designing a children's hospital. We're going to burn pollutants on site where the sick kids are. That seems dumb. And they're like, yeah, you're right. That's what broke through to them. It wasn't the energy story. And so this is an ongoing thing that I think we've all been dealing with. This is our 2030 data for the last 16 years. We were an early signatory for AIA 2030. We've been reporting on it transparently every year, like many of our peers have. And you can see that we're essentially stuck between 50 to 60%, like all of the other large firms. The trouble is that we're supposed to be at 80, and next year we're supposed to be at 90. And so we started really thinking about this, and I got into a conversation with Vince Martinez from Architecture 2030, and he shed some light on this. He said, all of you have been focused on efficiency. EUI envelope performance, and he's right. And you're only going to get so much blood out of that stone. But the whole reason that Architecture 2030 was even created was around fossil fuel reduction. That was the real mission of it. So if we only look at efficiency, we're only looking at half the story. In fact, if we look at what we're doing in terms of grid improvements and infrastructure, in terms of electrification, and then any sort of on-site solar, suddenly you realize that our projects are really doing a 90% emissions reduction total. So it's both efficiency and sufficiency and production. It's all three that need to be part of this. And then we also realized that there was this news story I saw outside of Pittsburgh, a coal-fired power plant closed outside of Pittsburgh, and asthma rates went down, especially among children. Well, it turns out the climate crisis is a health crisis. These are the coal-fired power plants in the country, and you can see the asthma rates and deaths associated with them. We're essentially killing each other in order to pursue fossil fuels. And this is what Time called the hidden health costs of climate change. All told, we generate about $800 billion in healthcare costs every year just here in the US because of climate change. About 500,000 people died in the last 20 years from climate pollution. So emissions equals death. And what this means to me is we, as important as it is to argue the net zero components of it from an energy perspective, I think we also need to be arguing from a health and a human perspective, because that means that we could decarbonize the entire grid for free just based on the health benefits alone. And I think that's a very important distinction. This is what we at Canon Design are calling health for all, where the idea is that, yes, if you look across your board, there are certainly benefits to you from facilities waste operations across the board to do these things. But in reality, we need to look at this as buildings as being a vital part of our experience. We spend 90% of our time indoors, and we're trying to convert the entire country. And it's, by the way, a country built on 20th century infrastructure and 20th century climate data. So to me, this is as much a health argument as anything else. Anyway.
Got it. So no, thank you for that. And it does is so. Obviously, we have discussed this in the past also, that the burden is not on the client to understand all the complexities. Finally, the client is going to understand the child's laughter, staying healthy, not having asthma. These are all outcomes that people can relate to. Obviously, things like embodied carbon, embodied emissions, designing for adaptability, resilience, all these things that we are experts in naturally are not the burden of the client, right? This is something that you and I have discussed also in the past. Now, having said that, do you really believe that the designers are able to achieve the balance between embodied and operational energy by actually having these conversations, or these conversations are just driving excitement, but when it comes back to design, we're still defaulting back to our old methods?
Well, what's improved is our analysis, right? We're able to do whole building LCA much earlier in the design, much earlier in the process, and do it quicker and quicker. And so, we have a mantra at Canon, which is we're trying to model at the speed of design. The way I picture it is we're shoulder to shoulder with the rest of the design team, and we need to give them this information quickly. So speed became a very big mantra for us. But also with embodied carbon, we're really seeing that today, right? We're building the building now, today. So there's a time value of carbon that makes the embodied carbon almost more important. After you build the building, you've got years to perfect it and tweak it and improve its operational emissions. You can also swap out systems on the building, but the upfront carbon is one and done. And so this created almost more of an urgency for us. So we knew that we had to be able to quickly analyze, is this an opportunity for mass timber? What are the opportunities around the concrete spec that we can improve and really change that? The trouble, as you point out, and as Susan rightfully mentioned, is both fear. We've always done it this way. We don't want to change. And also just it's perceived as a risk. There is no payback for embodied carbon the same way there is for operational carbon, right? If I make the building more efficient, it'll pay for itself on day one. It'll start paying itself back on day one. But for the carbon piece, for concrete, a low carbon spec, what's the payback? We've had a lot of success with clients that have an internal price on carbon, but they tend to be, international clients that have US headquarters. So that makes sense. But a typical university that has a carbon commitment and they know it's important, but there's no payback, and they're like, well, this costs more, and what's the benefit? It's a much harder argument to make. And that's why, to me, the health argument makes a lot more sense, because there is that payback. the health argument essentially builds in the lack of the financial ROI that you get from a more efficient building. But it's still a struggle. What I'd like to get to the point is where we're all demanding this, and that the you start to see this across the industry, where the Lafarge Cements of the world are making their standard concrete spec the default one be the low embodied carbon one.
Got it. So basically, I like the recognition that we are in the analysis phase. To make it a default, we are still a long way to go, right? In terms of basically being able to people think that this must happen automatically. That's something that we have to work on. Got it. So Sarah, one of the reasons I'm excited to have you on this today's panel is because you are one of industry's foremost expert on existing buildings. So we know that many net zero discussions still focuses only on new buildings, right? Even the discussion just now we had with Eric. But the real frontier lies in the existing building stock. 95 to 97% of the buildings are still limping around. There's so much work to be done. So how do we decarbonize our existing buildings at scale? And what will it take to make retrofits as aspirational as new design? Is there an opportunity to create some excitement?
Yeah, I mean, I never met an existing building I didn't like, honestly. And I think it's because I also like solving problems, and there's like a lot of problems in existing buildings. But you're right. I mean, they are the big opportunity, and we need to continue to think about how we can, implement at scale and reframe these existing buildings from like asset liabilities to the value add, or like we can decarbonize our existing buildings. But it's not we need to generate the excitement, because it's not as immediately exciting maybe as a new construction project. So it's like we start with the boring, I don't know, I even don't love using that word, but just like deferred maintenance and operations, right? Or like, what are the trigger projects where then we can imbue more of like the required changes and decarbonization strategies and healthy building strategies into our existing buildings. So, it's tightening up envelopes, it's fixing ventilation, it's actually looking at air quality, but then, optimizing schedules, looking at set points and sensor drift and calibration requirements and recommissioning. And I was even thinking, during the last prompt about we've had some internal reflections this week on, commissioning and how commissioning has changed over the last, 10, 15 years in the industry. And I think by way of example, a lot of the things that we are talking about now, even, health, the impact of health and the value of health 10 years ago felt kind of like the aha moment. And now we're still having that conversation. So specifically when we think about existing buildings, I think it's important to establish a roadmap. It's not like a one-time project, even insofar as a new construction project spans years. But when we're thinking about retrofits and net zero, specifically in existing buildings, these are like incremental capital decisions that have to happen over maybe decades even. So it's really like long-term planning, and then bucketing these strategies about like, what do we do right now? What do we do in year 7? Oh, and also the roof needs to be replaced then. So then what do we do in combination with that? And it really, with a good plan, I think we can move the needle from, overwhelm and reaction to feel like more proactive and like, okay, we got a roadmap, we got a plan, we're going to tweak it maybe along the way. But at least, we know what direction we're moving into. And then there's still opportunities for translation of, the kind of like dollars and risk and resilience matrix. Those conversations continue to happen, but it's a pretty big hill to climb, to Susan's point of like, we've always done it that way, which is one of my personal, I kind of like got a shiver. I'm like, oh, I hate that as a reason, but it is an ongoing reason. And I think when people kind of feel like there's this huge hill to climb and so much to do, it's like immediately fatiguing. So then we have to be empathetic to that on like, how do we bring people along and kind of like bridge that gap from aspiration to, the day-to-day changes and like mindset shifts that we need to make as an industry. Because it's like, new buildings are, yes, fun and exciting, but, Mahesh, back to your point, the real opportunity is in thinking creatively about our existing buildings and the stuff that's still standing.
Absolutely. And the points that you mentioned in terms of one, first of all, go big on roadmap. Second is that the solutions can be incremental and need not be done concurrently. So if you take a piece by piece and do it, still transformation could be attained. And that can significantly contribute to reduction in emissions, reduction in cost, yeah, creating more opportunities for creating additional savings. That kinds of builds an internal momentum as well. That's something we have seen with these type of things, right? So that's the best part about going incremental, but also we don't need to do a lot of things concurrently. You can do them independently. In a new building, you have to do them concurrently because occupancy will not happen. But an occupied place can take a little bit of time to do it right and do it smartly. That's for sure. And we have to solve this problem for sure. So with that, Sarah, I'm moving to now Susan. Susan, when we talked last time also, I'm always impressed by how you make this simple for the construction industry, right? At Pepper, you are trying to do net zero projects. You are trying to make efforts to educate your contractors on net zero. And sometimes the demand is there, sometimes the demand is not there. If the client doesn't demand also, I think you are doing projects where you're trying to bring those best practices, into it. So what is different? What's working? What's not working? And how are you making progress with your clients and creating your USP?
So I think my background's architecture. I'm a licensed architect still, but I'm in my career, I'm like 50-50. I've done architecture for over 10 years. I'm now in construction for over 10 years, which, to be honest with you, I did not think I was going to be on this side of the table for as long as I have been so far. But
congratulations.
Yeah. But what I like about it is that the architects bring the big ideas, right? And then they can sell it. Like Corey's saying, emissions equals death. Could you imagine a GC saying that to a client? I don't think so. But it's great that they can have like those big words and those big phrases to kind of stir up those emotions. But when the contractor comes involved, I think what our superpower is the data. It's the numbers. So we get to hold the purse strings. We get to say, okay, let's take this big idea, work with the architect, and then when it gets into the field, here's like the reality of the situation. And when you actually have a strong architect or a strong engineering team, regardless if the client is on board or not, if you have a contractor that can understand it and appreciate net zero or sustainability, like that strength to kind of talk through the client on why they should, maybe go net zero, is crucial. Because it's not architect versus contractor, right? Or the client's demanding it, so we have to do it. It's kind of like this collaborative process. And so on my side of things, what I have found, because I think I have to win over the contractors more than I do anybody out of the party, even being on the construction side, is that I just use the data to tell the story. So much like what Eric was talking about with the LCA, he has to do it really early on to kind of see like what levers he can push and pull. We have to crunch those numbers early on too, to say like, here's your return on investment, or here's your payback, or here's your first cost. And so I kind of wanted to just use an example of a project that I'm working on right now where net zero wasn't even part of anything. And we actually had to use data to go back to the school board to ask for more money. So we have a local K through 12 school district, Southside Chicago suburb, and they need a new facility, transportation facility, where they have all electric buses, great, 32 of them, and they need a new maintenance facility to work on these buses and charge them. So Pepper works for the district, so we got the job. And the school district asked the board for, the millions of dollars it's going to take to build this facility. And then 3 weeks later, the architect was looking through the school board's documents and says, hey, you guys just passed this carbon action plan last year. Why should we be making this building net zero to meet your plan that you passed last year? Nobody was paying attention. Nobody saw it. The architect just happened to come across it in the documents and pose the question. So then the superintendent's like, well, maybe, what does that mean? What does that look like? How much is that going to cost us? So with Pepper already being the GC on the job, I came in, worked with the architect and the engineer and say, okay, well, what is it going to take to make this? Because we're already in DD at this point. So what do we need to do to make this net zero? And we kind of made a good, better, best. Like best is net zero and good is like incremental, like right, good, better, best. To kind of show those baby steps that Sarah was talking about of like incremental change to kind of get you to that net zero solution. Put all the pricing together. Then we matched it up with the incentives that are available in the state to drive down that cost. And then we went to the school board to ask for more money and explain, this is why we are asking for more money to meet your carbon action plan, but here's what you're benefiting in return. Here's what the students are going to benefit in return. And then the school board on their own were like, oh, this could be an educational thing. Like we could have classrooms come here. We could have tours for the community. And it was really nice to see how just a little bit of data, right, crunched between the design team and the construction team turned into, the school board being excited about something that they could showcase to say, hey, we made this commitment a year ago, and here's how this one project is help fulfilling this commitment for the school district. And I think it's like those little moments, if you have the right team members on those projects, like we could copy paste that all over the place, and then that's going to impact that larger scale of what we're trying to achieve.
Yeah, Susan, when you talked about data, obviously your universe revolves around data, right? I mean, everything is about cost and specifications and precision. It has to be precise in your area, right? Everything is precise in your area. But I also think that data leads to an experience to your GCs. For example, if a GC has not done that ever before, and they are able to understand and learn from you, the potential question of we have done it before changes right there through data and through experience. That's another thing that I see as a natural outcome as you influence these projects to do things differently and really move them towards net zero. They are not only just working on these projects. When they go to a next project, at least they will be able to cross-pollinate their knowledge, at least a little bit be less resistive, be a little bit more creative. Those opportunities also exist. Is something that I thought your experience is educating the broader population as well.
Yeah, I think we need left and right brain in order to sell this and then show the practicality of it and the benefits on both sides, that people can understand the emotions behind it and the benefits, the health benefits, and then the economics. So it's, it's that triple bottom line just through a building.
Thank you, Susan. Eric, back to you. What are the myths and facts about net zero in design? What are your experiences and how people are responding?
Well, as I keep getting older, I keep getting grumpier, and so I find that I've been yelling at the clients a lot more because they keep saying things that don't make any sense. So here's a typical setting, right? We kick off the project. We start. Me and the team, show up, and I'm about to do a sustainability kickoff. And before I even do anything, the head of facilities looks me in the eye and says, just so you know, I hate sustainability and I hate LEED. I mean, that's how people say hello to me when I walk in a room, right? And so, and I never know what to say to that. So what I usually say is, me too. I don't know. And, but let's not talk about sustainability. Let's not talk about LEED. Let's talk about you, right? What's going on with you? And really just becomes this like psychological thing of mapping out their pain points. What are they struggling with? What's driving them crazy? What's keeping them up at night? And that's really it. Because otherwise, if I just go in head on, they end up saying things like, we tried a PPA and it didn't work, or we tried solar and it didn't work. It's like, what do you mean it didn't work? Like the panels didn't produce energy? And it's like, no, it didn't pencil. Well, when was that? 2004. Okay, well, that was over 20 years ago. things change, right? And so what I've been saying to them is, are you still using the same cell phone from 2004? And they go, no. I'm like, yeah, exactly. Solar is a technology, and like any technology, it improves and gets better, and now it's cheap. So let's try it again. But because of this fear, and because, well, we always do it this way, and it always seems to work, and nobody seems to complain, we'll keep doing it. That momentum is the trouble. So we're constantly breaking that momentum. A lot of their excuses, what I call frictions, a lot of their frictions that they throw up are not real. They're made up. We see this all the time. Well, I heard solar costs too much. No, you didn't, you little liar. You didn't ever heard that from anybody. You just made that up. How would you know that, right? You've never priced solar in your life. You've never actually gotten a bid. You've never analyzed it, or seen what the payback is or what the roof potential is. And that's kind of, again, back to the beauty of the analysis. We're whipping up these analyses so much quicker now that we're able to show the roof, the non-roof, and all the areas on site of what the solar potential is based on pretty reasonable pricing, and then tie that to a real bid, and then show them the payback down to the day of what it would be. The other thing is, because the cost of electricity keeps going up, one of the other things that I show is I show this slide that shows all the utilities, and there's a slider for each. And I go, where do you think the price of these is going to go in the next 20 years? And they're without even hesitating. They always say, oh yeah, it's all going to go more expensive. It's all going to go to the right. Move all those sliders to the right. And I said, okay, so if you think that all of your utilities are going to get more expensive in the next 20 years, why are you making decisions based on today's prices? Doesn't that seem short-sighted? Doesn't that seem dumb? And so to me, it's really about energy independence, right? Like, let's have them control their source of energy. And so that's really changed the conversation around net zero and solar. Not that it's a nice to have, but it's part of a larger strategy around, we need to do something, or these utilities are going to rob us blind. And they kind of know that. So that's kind of reinvigorated the conversation around power purchase agreements, around PACE financing, around even offsite stuff. And the cool thing is we can do the math now. So we're doing a big hospital for Mayo Clinic. We calculated that, I forget the exact numbers, but it's surrounded by farmland. So we calculated that you could put, I think, 23 wind turbines on some piece of farmland and generate all the power needs for the entire campus, just half a mile away. And it pencils. It makes a lot of sense, given that these are high EUI buildings. So again, it's that balance of both efficiency plus sufficiency plus production. That seems to be the recipe, and we're really trying to challenge their old thinking around it, because what Susan alluded to is very, very real. That kind of persistent momentum of just sameness that keeps going.
Yeah, I think being provocative is also equally important, because we have a role to play in holding our clients accountable. So, but I'm a little bit amused with your responses. How still you are popular, on a lighter note? You keep giving these provocative responses to your clients.
Yeah, I think it's a bit of an emperor's new clothes thing. I think they like that I'm not just backing down right away. Plus I have the benefit of, I'm not the PM, I'm the sustainability guy. So, my team can say, well, he's the subject matter expert for that one thing. So of course he's going to be passionate. Like, I think that I get a bit of a pass because I'm in this niche. But when I do these things, I'm always scanning the back of the room, because that's where my colleagues are standing, and their faces like, hey, Freed, where are you going with this? Kind of thing. But I think the analogy to me, what I always say to the team is, I feel like I've got the tiger by the tail, and the tiger's fighting me a little bit, and I'm just not letting go right away. I mean, at the end of the day, it's their project, right? At the end of the day, they're going to say yes or no. But what I don't want to do is, I don't want to fail them by not giving them enough information for them to make a decision. It's our job to give them to really give them enough to make an informed decision, and I really take that part very, very seriously. Remember, the architects, we're responsible for compliance with all prevailing codes. And so, like, the example that you heard of, hey, you guys just passed this carbon thing, that happens all the time. We just did a lab in Michigan, and Governor Whitmer had passed an executive order saying that all new state buildings had to be net zero energy. And I brought this up at a meeting. And if you've never heard butt cheeks clench up so quickly before as when I said, did you realize this has to be a net zero building according to your governor? And they're like, what? No. Yeah, it's not me, man. It's your governor. Isn't she great? She's so smart. this has to be a net zero building. And they did not know that. They did not put that in the RFP. They were completely unaware that it was happening. And so I love those opportunities to remind them of, hey, it's our job to be in compliance, and this is what compliance looks like.
Yeah, no, that's great. That's great. So Sarah, to you, we are seeing the convergence of building science, AI, digital twins, performance data. All of these things are coming together. Not close enough yet, but they're all coming together in one direction. So as we predict the future, as we move into the future, do you believe that we are close to a real-time evidence-based design that actually verifies carbon outcomes rather than just modeling them? And, one of the things that I keep talking about is that, of course, in the operations phase, you can do a lot of calculation, but is there an opportunity to do intervention during design and construction, even if you don't go to net zero all the way, but at least ask the questions, put those perspectives in modeling towards a net zero future, even partially, right? That's something that we ask. So I would love to hear your thoughts on this, because this is an area that you spent quite a bit of time on.
Yeah, it is. I do, and it is exciting for me. I think it's also fatiguing in a way, right? Because we reflect back on all the things we've talked about in this panel already, and just the reality of the experiences of everybody involved in delivering, new construction, existing building, decarb, net zero projects. It's a huge range, right? It's bigger than I could reach, right? And your question now speaks to kind of like, where are we at on the very forefront of some of these things, and what could we do, and the possibilities of the future, and I'm very much into that and trying to predict the future. But the fatiguing part is to then have, and I've had the exact same experience that Eric just mentioned, where you walk into a room and somebody's like, "Hello, sustainability person, I'm gonna fight you the whole way," and you're like, "I'm glad you care so much about this." So there's just we need to keep constant attention on that spectrum of experiences to bring everybody along and move the whole spectrum. But yeah, on this specific topic, I personally don't feel like we are, fully there, but I also feel like nothing is ever good enough. So this is a personal problem, but we're closer now than people realize, one, and closer than we've been before. So that's, opportunistic in that way. And I'm excited about these things converging specifically right now. And there's an intersection of all these that are interplaying with each other. Sensor density and continuous monitoring is better than ever before. I see there being real opportunity in the very near future to actually integrate all of this data and BAS stuff that we've just been aggregating into operations, and then also overlay design on top of that. So design specifically for a future where we get the information from how the building is operating in terms of thermal comfort and CO2 and occupant density and plug loads, and just put that into operation and think about it at the design phase. But again, it requires this evolution of design thinking. There's also, obviously we can't talk about technology without bringing up AI, and I both sighed when I said that, but I am also a regular user of it, because I do think it's a tool that, when leveraged correctly, will allow us all to be more efficient and move us faster and further in the direction that we need to go. So, all this kind of design, predict, build, measure, adjust, it'll just speed up as a result of all this AI stuff that's happening. And then, the pressure and the changes in terms of regulations and requirements that we all have to kind of keep an eye on and then educate our clients about. Technology also allows us to know more about all of that stuff and keep an eye on that constantly changing landscape. So it definitely ties all of the things together. And specifically on modeling, I do think the future looks more like this ideal that we've been talking about of modeling, calibrated models and digital twins. And my hope is that it will stop us, or at least make us think critically about over engineering things and adding safety factors upon safety factors, because we don't know what's going to happen. If we can know what's happening, then that'll allow us to make better, more informed design decisions. So it's we're closer than ever before. The technology is here, the future's here, but the next frontier of that is the alignment of all of these things. And again, I said before, I don't think there is a technology or that multiple technologies are the solution, but it's got a role to play. Absolutely.
Yeah, and I have a follow-up. Thank you for that, Sarah. I have one follow-up question, very short one, which is that are you guys using any tools, such tools today to do in your practice, or is it just the learning curve is still in progress?
I would say yes. Like we're both lucky and privileged, and also unfortunate to be in a place where we have to use and be aware of any and all tools that are out there. So when somebody comes to us and says, "Hey, have you tried this?" We have to like either have an awareness about it or be willing to try it. And I think that's, again, like it's a good news, bad news thing, because that's the role that we're in. So yes, and what else is out there? That's usually how I answer that question. It's like, yeah, we've tried that, or oh, I've never heard of that. Let me look into it. So yeah, we're in all of it, I would say.
That's great. That's great. Hope these tools get us more closer to our work. That's, that at least eliminate all the redundant work, and so that we can focus on the most important work of solving these critical problems. Thank you, Sarah. And I will wrap up this panel with one final question to Susan. Susan, you already touched education. Education is huge for the construction industry, particularly to meet the upcoming climate deadlines. Not to be just seen as contributing to carbon, but actually working to eliminate it or even make it go positive. So, what are the other big topics that the industry has to work on? Are there any other topics other than just education?
I think yes, but I think education is the one that's tying it all together. So first of all, let me just please understand, general construction has come a long way in the last 10 years. So contractors are usually a little far behind on kind of getting up to speed, but when I started, there were no peer groups. The only peer group I had was the environmental AGC peer group, and Solon Construction out of Seattle was the only other like building GC in that peer group. The others were just like civil, like infrastructure contractors. And I thought environmental meant like, oh, we all care about the environment, or we are all about sustainability. And that is not what that peer group was about. It was about how do we deal with state laws from state to state when we build our highways. So it was like, this is not anything that I'm interested in or that I signed up for. But over the last 10 years, we've had multiple peer groups. Like the AGC just created a new one that's a climate group just for GCs. AXA XL is an insurance provider. They have a sustainable peer group for GCs. Building Green, which they've sold it, but it's the Sustainable Construction Leaders Group. So there's a bunch of GCs now coming together and saying, okay, what are the problems that we need to solve on the construction end? Now, with that said, if you look at all of the commercial contractors in the United States, there's about 60,000 of us, okay? And if you break that down to small, medium, large size based on employment, so like small would be like 500 employees or less, medium is 500 to 1,000, and large is over 1,000. 90% of those 60,000 fall in the small category. So imagine how much resources they actually have to try to tackle these bigger problems. They probably don't even have a sustainability team. It's very rare. Some might just have one person, and there's probably having to be billable. So all their time is just project work, not really trying to do R&D and trying to work with their peer network to solve bigger problems. So right now, the GC, while we have gotten a lot of, success, we're still fragmented. And the ones that are kind of like in that large category, which are under 100, by the way, so it's very small, like 2% of pie, are trying to use our resources to try to create like a unified standard for everybody to follow, in understanding that some of these GCs don't have a sustainability person. Some of these GCs just have a project engineer who just graduated from college, right? And who's probably drinking from a fire hose because he's the most billable on the job site right now. And so he can do it all.
Correct.
And so one of the things that our groups created it's called the AGC playbook and on decarbonization and carbon reporting. So it's free. So that's key because some GCs don't have the budget for anything. So it's, and there's a calculator tied to it. So you can start tracking your emissions at your job site. So I invite everybody to check that out. It's on the AGC website. What we tried to do was break down where all the emissions come from over your scopes 1, 2, and 3, from cradle to grave. We try to break it down to, if you have your project engineer tracking these emissions on your job site, or you have an experienced sustainability person tracking on your job site, kind of like, what's the difference? And what are those two individuals able to do? How to assign accountability through your trades. So what do your bid docs look like? What does the specs say, working with the architects? What's the contract language around emissions tracking or information that we're asking for from these trades? And then how to actually go about reducing that going forward. And it's like, this is just like the first step into trying to create some sort of guide for everyone in that 60,000 pool to follow and just not overwhelm. So it's still within that education category, but trying to say, and here's the how-to, like, how do you do that? How do you have that conversation with your team? Who is accountable? How do you make those hours billable going forward? And so that we get the playbooks done, written, published. And now we're trying to build upon those tools, especially for scope 3 and the 15 categories of like, okay, if you're doing, if you're self-perform contractor out of those 15 categories, here's where you should probably concentrate. Rather, if you're just a CM out of the 15, here's where you need to concentrate, because we know the deadlines are coming up, especially with California, right? And then other states are going to follow. So we're trying to really come up with that common reporting structure, just like the AIA did for 2030 back in the day. So everybody's playing with the same rules, with the same numbers, because the data tells the story, and we want to make sure that everybody's reporting in the same way and being able to track in the same way. So that's what's happening on the GC side.
Yeah, thank you, Susan. Thanks for joining that resource, the approach, and all the collective collaboration that's happening in the construction industry. I want to underscore your point. The construction industry success story is the testament is very evidenced by the thousands and thousands of green buildings that are standing there, LEED buildings that have been certified, to silver, gold, platinum. All of them are part of the GC's contribution, So that's definitely greater contribution has happened now. How we accelerate it, how we go there bolder, faster, and most importantly, lead it through data. I think that's where most of the opportunity lies as we go through this process. So thank you very much for always your enlightening comments and also trying to drumbeat for the construction industry. So Eric, Sarah, and Susan, thanks again for this wonderful discussion. And we will schedule future conversations, a little bit more deeper topics around these topics. And thanks to all the audiences who have been listening to us. Please reach out to us at Global Network for Zero. Explore our program, explore our platforms, reach out to our network members, our advisors, so that we can continue to share knowledge and really get to this net zero world, because we need that all the more faster